Good morning this Wednesday, the 24th of April. I'm Grady Wolf, market analyst with Bell Direct. Over in the US on Tuesday, strong corporate earnings results drove Wall Street into rally territory following a turbulent, widespread sell-off last week. The Dow Jones rose 0.7%, the S&P 500 gained 1.2%, and the tech-heavy Nasdaq ended the session up 1.6% yesterday. Music streaming platform Spotify jumped 11.4% on Tuesday after beating Wall Street expectations for first quarter results, while Tesla is set to report earnings after the closing bell today. So far, 20% of the S&P 500 companies have reported first quarter results, with 76 having beat analyst expectations according to FactSet. In Europe overnight, markets closed higher also due to strong corporate earnings reports in the region being released. The Stock 600 rose 1.1% on Tuesday as all sectors aside from mining closed the day in the green. Germany's DAX rose 1.55% yesterday. The French CAC added 0.81%, and the UK's FTSE 100 rose to another intra-day record high before settling the day up 0.26%. The easing gains on the FTSE 100 followed the Bank of England's chief economist making hawkish comments regarding the rate cut outlook in the UK. Asia markets closed mostly in the green on Tuesday as favourable business activity data in the region indicated faster expansion of activity in April, in a rebound for key economies across Asia. Japan and India recorded faster rates of expansion in April across the business sector, which prompted Japan's Nikkei to rise 0.3% on Tuesday, while Hong Kong's Hang Seng rose 2% and South Korea's Kospi Index closed the day just 0.24% lower. The local market has recovered from last week's sell-off to start this week in positive territory, with Tuesday's session closing up 0.45%, driven by Wall Street's rally on Monday and ahead of key local inflation data out just before midday today, with the market expecting a stark decline in inflation from an annual rate of 4.1% in Q4 to 3.4% in Q1. Tech stocks led the charge on Tuesday, rallying 1.73% on inflation and rate cut outlook, while energy stocks came under pressure amid the sliding price of oil over the last week. Gold producers were also sold off on Tuesday on the declining price of the precious commodity, which sent Ramelius Resources, Regis Resources and St Barbara lower yesterday. Soft almond prices caused investors to flee Select Harvests on Tuesday, sending the share price of the almond producer down 11%, while investors also sold out of Lifestyle Communities after the company signalled lower home settlements than expected in the latest update. Brambles was also one of the leading losses on Tuesday after the Pooling and Logistics Solutions company posted a trading update that disappointed investors. On the commodities front this morning, oil is trading 1.5% higher at $83.35 a barrel. Gold is down 0.4% at $2,324 an ounce, and iron ore is up 0.34% at $108.62 a tonne. One Aussie dollar is buying 65 US cents, 100.43 Japanese yen, 52.06 British pence and 1 New Zealand dollar and 9 cents. Ahead of the midweek trading session here in Australia, the SPI futures are expecting the ASX to open the day up 0.31%, tracking Wall Street's rally overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the 12-month price target on Med Advisor from 44 cents per share to 47 cents per share and maintain a buy rating on the healthcare tech company following the release of a strong Q3 result out of the company, driven by US growth, including revenue of $99.8 million year to date and Q3 revenue of $24.2 million, which is up 42% on the PCP. The Q3 update gives Bell Potter's analysts confidence that MedAdvisor is executing nicely on the path to profitability. And Bell Potter has maintained a buy rating and price target of $6.35 on Boss Energy following the announcement of the company's first drums of uranium being produced at its Honeymoon mine in South Australia, making Boss's Honeymoon mine the third uranium mine operating in the country. And that's all for this morning. Have a wonderful Wednesday and as always, happy investing.